Okay, so the global financial landscape is really going through a massive shift, wouldn't you say, driven mostly by things like blockchain and cryptocurrencies.
Absolutely. It's transforming rapidly.
And right at the start was Bitcoin, the first one, and it's really carved out a unique space compared to traditional fiat currencies.
It really has.
Today, we're diving deep into its potential specifically as a savings tool right here in Colombia.
That's right. And the Colombian context is particularly interesting. You've got this convergence of crucial economic factors, persistent inflation, the peso constantly losing value,
Yeah, that's a big word.
unlimited access to financial services for a lot of people, and just this underlying search for, well, economic independence.
Hmm.
So in that scenario, Bitcoin emerges as this potential alternative for preserving value and maybe boosting individual financial autonomy.
Exactly. So the goal of this deep dive is really to explore the motivations, the opportunities out there, and also the inherent challenges of adopting Bitcoin as a way to save, specifically within Colombia. We'll be drawing on various sources to get a full picture.
Okay, so if we look at the economic situation in Colombia, well, sustained inflation over the last decade has significantly chipped away at people's purchasing power. That's just a fact.
You feel it every day.
You do. And add to that the constant devaluation of the Colombian peso against the US dollar.
Hmm.
That just makes imported goods, technology, global services, everything more expensive.
And a crucial point to consider is the unequal access to the conventional banking system. We have data from Banca de las Oportunidades and the Superintendencia Financiera
Right, the official bodies.
showing that large rural areas and also vulnerable urban populations still face, significant hurdles accessing even basic financial products.
In that situation, it makes formal saving really difficult, almost impossible for some, and it just helps perpetuate poverty,
It's a
unfortunately.
tough cycle.
It is. And on top of that, you have this kind of declining public trust in traditional banks. You hear about high fees, lots of red tape, bureaucracy,
Oh, yeah.
and unfortunately cases of corruption. All that creates an environment where people are naturally looking for decentralized, maybe more trustworthy alternatives.
Which is where Bitcoin starts to look interesting as a savings tool, right? One of its key features is its deflationary quality.
Exactly.
The underlying protocol, when you say protocol, we're talking about the core set of rules Bitcoin runs on, almost like its constitution.
Precisely that. It's the fundamental code.
Yeah.
And that protocol sets a hard cap, a maximum limit of 21 million units ever to be created.
Right, 21 million. That's it.
And that program scarcity, it's algorithmically defined, stands in stark contrast to the, well, unlimited ability of central banks to print traditional currencies.
A key difference.
A fundamental difference.
Yeah.
It gives Bitcoin this inherent deflationary nature, at least in theory, pushing back against the potential inflation of traditional money.
Another really important aspect is the complete control Bitcoin gives the user over their own funds by cutting out the traditional financial intermediaries.
The banks, the payment processors.
The saver has full command over their assets.
Yeah. Essentially, a secure digital wallet managed directly by you using your private keys can completely replace a traditional bank account. It allows for self-custody and autonomous management of your funds.
And that private key is crucial.
Absolutely critical. Think of your private key like, well, the one and only physical key to a safe deposit box holding your Bitcoin. If you lose that key,
It's gone.
it's gone forever, just like losing the only key to that box. The responsibility is entirely on you.
Plus, Bitcoin makes international transfers incredibly straightforward, doesn't it?
Oh, significantly.
Sending and receiving value across borders happens almost instantly, and the transaction costs are usually much lower compared to the old systems.
And that feature is particularly beneficial for Colombians receiving remittances from family abroad, or for, say, freelancers working remotely for international clients.
Yeah.
It really streamlines getting paid or sending money.
Okay, let's talk about the crypto infrastructure here in Colombia. It seems to be developing steadily.
It is, yeah. There are several regulated local and regional exchanges operating now,
Yeah.
like Pan Exchange, Buddha.com,
Hmm.
Bitso, Binance. You have options.
And these platforms allow you to buy Bitcoin using Colombian pesos, right, through common methods.
Yes, exactly. You can use widely used payment methods like PSE bank transfers, digital wallets like Niki and DaviPlata, even credit cards in some cases. So the on-ramps are there.
And we're even seeing physical crypto ATMs popping up in major cities like Bogota, Medellin, Cali. That's another sign.
Definitely.
Plus, a growing number of businesses in these cities are actually starting to accept Bitcoin payments.
Right. And that growing acceptance in everyday commerce shows the ecosystem is expanding beyond just investment towards more practical day-to-day use, at least in urban centers.
It's also worth mentioning the regulatory efforts starting up. The Superintendencia Financiera has launched pilot projects within a regulatory sandbox.
Yeah, the sandbox, that's important.
What does that actually mean in practice?
Well, this setup allows for supervised collaboration between traditional banks and crypto companies. The idea is that this controlled interaction will help lay the groundwork for a more solid legal framework in the future.
Ah, okay.
One that provides greater legal certainty for the sector, hopefully encouraging innovation, but under supervision.
Got it. But despite the opportunities, we absolutely have to acknowledge the risks and challenges involved in saving with Bitcoin. One of the main ones is its price volatility, right? It can swing wildly.
Hugely. The sudden and sharp fluctuations in Bitcoin's value pose a significant risk, especially for savers who might need quick access to their money, liquidity, or those who don't really grasp the long-term investment nature of this kind of asset.
Yeah, if you need the money next week, it's maybe not the place for it.
Probably not, no.
Another major challenge is the gap in financial education. There's often a lack of widespread understanding about how Bitcoin actually works, how to securely manage those critical private keys,
The keys we just talked about.
and just the fundamental concepts of blockchain technology itself. That's a pretty big barrier.
It really is. And lacking that essential understanding increases the risk of users making mistakes, operational errors that could lead to the total irreversible loss of their funds.
Scary stuff. And finally, we have to warn people about the scams and fraudulent platforms out there. The newness and perceived technical complexity are definitely exploited by bad actors.
Unfortunately, yes. That's why it's so important to emphasize using only recognized, reputable exchange platforms with a proven track record.
Do your homework.
Absolutely. And foster critical thinking and due diligence among new users to help them avoid falling victim to scams and fraud. Be skeptical.
Despite these challenges, though, saving in Bitcoin does present some potentially significant goals for Colombian society as a whole. First off, it could potentially encourage a stronger culture of saving and responsible investment among the population.
And that's a possibility. Additionally, Bitcoin has the potential to facilitate financial inclusion for rural communities and vulnerable populations who've traditionally been left out of the formal banking system.
Right, reaching the unbanked. Another relevant goal is offering some tangible protection against the eroding effects of local currency devaluation and persistent inflation.
Yeah, a hedge, potentially. Also, adopting Bitcoin could spur digital entrepreneurship and participation in the globalized economy, allowing Colombian individuals and businesses to operate in a borderless financial market.
And finally, saving in Bitcoin offers a path towards potentially reducing dependence on the traditional financial system, providing a decentralized, maybe more accessible alternative.
So, summing up, Bitcoin really does present itself as a savings alternative, with solid arguments for a growing number of Colombians seeking, greater financial independence, protection against economic instability, and a gateway to the global digital economy.
And while the risks are undeniable and need careful attention, informed adoption of Bitcoin does offer significant advantages in terms of autonomy over your funds, transparency in transactions, and access to an alternative financial system.
But for Bitcoin to truly realize its transformative potential in the Colombian context, it really requires a collaborative effort. We need citizens, educational institutions, tech experts, and regulators all working together.
Yeah, it takes a village, so to speak.
Pretty much. With a solid foundation of financial education, responsible user practices, and the implementation of clear, adaptive regulatory policies, well, Bitcoin savings has the chance to evolve from just an emerging trend into a potentially strategic tool for the country's financial progress.
So perhaps a final thought to leave our listeners with.
Yeah, it's worth reflecting on how understanding and wisely adopting disruptive financial technologies like Bitcoin could fundamentally reshape how individuals relate to their own finances, especially in an economic environment as challenging as Colombia's.
A powerful thought indeed. Food for thought for everyone listening.